Hope you all had an amazing weekend. Let's all bless and boom. I will be back in the States next Tuesday. Alright, so DXY, right? Alright, so what happened? Same thing like last week. We were expecting this to continue. An indicator, so in this case, I use the MACD. Notice when this consolidates. So you see what happened here? So what happened? Same thing like. Alright, so DXY, right? Alright, so what happened? Same thing like last week. We were expecting this to continue going up, and then look what happened. See how price broke down? Now, again, you guys know I talk about flag formations a lot, right? For your continuation up. Flag formation, then your continuation up. Flag formation, then your continuation up. So you see what happened here? Again, you see what happened when price came here? It didn't break up like it did the previous two times, right? Now notice. Now, if you're just strictly watching based off of price action, notice the bullish candlesticks, right? That exploded up to the upside. Happened here, and then it happened here. Notice you didn't get that over here. Now, if you use an indicator, so in this case, I use the MACD. Notice when this consolidation was being created, right? This bullish flag. Look what happened on the MACD. So I'm on the 1 hour time frame, right? So price has already made the cross to the upside. So that was the impulse, right? And then it pulled back, right? Now notice when it went up to the upside, it continued up. It stayed above the histogram. Stayed above, even though when it was pulling back, like right, it was showing sell, pulling back sell, but not a true sell, because remember, true sell is below the histogram. Remember, that cross lets you know when the change of momentum, change of the trend. So as long as you don't got the change of the trend, at the end of the day, overall, you're still in an uptrend based on the 1 hour time frame. So if I'm looking for this buy, as long as price, my MACD, so the MACD line, the signal line stays above the histogram, I'm looking for my buy, right? Now, what's one of my rules? I don't ever enter on the time frame I'm analyzing. So if I see a bullish flag forming on the 1 hour, I'm going to jump down a minimum of 2 time frames, right? So 45, so boom. So I'm going to end up on the 15, right? We don't have the 45-minute time frame, so 30, 15 minute. So when I go there, right? Oh, getting that loading again. All right, no problem. So when I go there, and I got the flag, right? I got the flag forming right here. Now, right before I buy, again, I'm looking for that crossover. See that? Right? So that means this would be a good area for me to buy. Right here. See how that lines up? Right? For those always wondering, how do you get good entries? How do you know when to buy, when to sell? So once I identify the pattern, now I need to figure out how do I get inside, right? So I got my MACD crossover over here. I got another MACD crossover over here for the buy. Right, I had another one over here. Now, why so many? Well, because, and this is the thing, when you jump down to a smaller time frame, especially when you use an indicator, it's going to have you jumping inside the market a lot more often as opposed to operating on the higher time frame. So notice how I had 1, 2, 3. So I could have bought here, right? I could have bought here, right? Now, 1, 2, 3. Now notice if I go back to that 1 hour time frame, right? If I go back to that 1 hour time frame, I don't have that many buy opportunities, right? See, I don't get that many crossovers. I didn't get that many crossovers to go under, to come back up, under to come back up, under to come back up. That's because I went down to a smaller time frame. So I always tell people, you want to be aware of what time frame you're operating on, because now if I'm looking to enter on the 15 minute, right? Let's say I go back on the 15 minute. Alright, so I go back to the 15 minute. If I go back to the 15 minute, these crossovers, they're going to have me in and out the market, right? So let's say I would have bought here. Place my stop loss right below, right? Wherever I enter at, my stop loss is going to go below the previous high or low. So my stop loss is there. So that's one entry. And then boom, look what happened. Price pulls back, right? Doesn't knock me out of my first position, but then it crosses over again, right? Right over here. So then I re-enter right around this zone. So yes, I can place another stop loss. But look what happened. Price went up and then came back down. Definitely stopped me out here. Most likely would have probably stopped me out here, right? Wick, spread. And then we had another crossover. So this would have been your final entry. And then finally the move up. So that's why I always say whenever you're entering the market, whatever time frame you're analyzing. So if I'm on the 1 hour, I don't want to jump down no more than 2 time frames. So 1, 2 time frames. So if we jump up to that 30 minute, right? Let's say we jump up to that 30 minute. So I'm on the 30 minute time frame. So again, same thing. So you see how from the 1 hour, 30 minute, it would have had you entering multiple entries, 15 minute, and if I would have gone down to the 5 minute, definitely, you would have probably seen like a fourth one. So I always tell people, again, when you're utilizing the smaller time frame, because so many people, they want to use the 1 minute, the 5 minute, like I get it. But understand that because you're operating on those smaller time frames, the market is going to have you in and out a lot more often, right? Now, let's take a look at what happened to this flag right here. Same thing. So if I see this flag on the 1 hour, I see this flag on the 1 hour. So same thing. I got my impulse, right? So that was this explosion. And then I had my correction, right? So market was pulling back. So I'm on the 1 hour. So let's say I want to, I'll use the 30 minute this time. Right? So when this was pulling back, notice, right? Let me zoom in there. Notice that this never crossed over and went under like here. It never crossed over and went under like here. It stayed above it. And literally, you just watch. So as soon as this starts gaining bullish momentum to the upside, as soon as the blue line is back over the orange, then boom, that's your entry, right? Just being patient and waiting, boom, that's your entry, right? As you can clearly see, your blue is above the orange, all right? For those who can't see it, let's make it a little bit stronger. There you go, blue. There we go. So you see how the blue is above the orange? Once that happened, this is where you enter the market, right? One of those 30-minute candlesticks. Your stop loss is below the previous low, right around here. And then as you can see, you have your move to the upside. So now it brings us to this. And I wanted to get this out the way. So now when people ask, how do you know when a flag is over? Or when do I get in? I can go back to this video, revert back to the beginning, because I explained this at the beginning of this webinar. Now there's no more confusion. So look what happened. You had another continuation, right? Impulse, correction, continuation. Impulse, correction, continuation. Another correction. Look what happened here. So look what happened, right? Let's say I'm on the 30-minute. Look what happened here when it pulled back. It crossed over. You see, over here, you didn't get a crossover to the downside. You didn't get a crossover to the downside. But you got a crossover here to the downside. So for those wondering, well, how do you know when a flag is over? It tells you right here, right? Even if I jump down to a smaller time frame. So let's say I'm on that 15-minute, right? Same thing here. Same thing here. You had a small pull up. But then look what happened. If I'm going based on the 15-minute time frame, right? I analyzed this on the 31 hour. So when this flag was being corrected, look what happened. I got a MACD crossover to the downside. And then this happened. So that's how you know, right? So your MACD will always let you know if the continuation is going to happen. Price is going to constantly keep going in that direction. Or it's going to break down like it did right here. Now, guess what? That flag is no longer valid, right? See, you didn't get that over here. You didn't get that over here. You got that over here though, all right? So those are the things you guys need to watch out for. So when you are identifying a flag, and it doesn't matter what time frame, right? Remember, these patterns operate on every single time frame. So you'll see flag patterns on the 4-hour, on the 1-hour, whatever pattern you see on one time frame. Keep in mind, when you go to another time frame, so when you drop down 1 or 2 for that entry, and I advise no more than 2, you got to keep in mind, especially if you're using an indicator, right, to make sure that price is still in a line with the trend. Because right here, again, I had a nice impulse, flag, and then boom. So my entry is not until around here. So this is in line. So you see what happened when price came up here? Let me erase all this for a second. See what happened when price... Right. Go to the 4-hour, right? So technically this was this right here. So let's remove this. So we see how this broke down, but you see what happened when price got back up to the same range, like it did here, like it did here. And then look what happened here, right? See the difference? Just look at it. Sometimes it's good to just look at the chart. Don't be so quick to buy and sell. Just look at the chart. You see the difference between here, right? You got here and here. Look at the difference. That, and look what happened here. That just kept going. No turnover, no nothing. So I'm on the 4-hour, right? So let's say from the 4-hour, 2 time frames down, let's say I go to the 1. Matter of fact, let me just go down 1. Let me say I go down to the 1-hour. So you see what happened on the 1-hour? So I'm watching this on the 1-hour. So I went from the 4-hour down to the 1-hour. I get my break. Right? I get my break. So now Once this broke down, now I can sell. Entry around here, stop loss above, now I sell. Same thing here. So look what happened over here though. Price came up, no breakdown. The crossover didn't happen until over here. So this is where I'm selling. But you didn't get that over here. You guys understand the difference now? You see? So this is the problem when a lot of you guys, you're looking for your entries for your buys or sell. You're not lining everything up. That's the difference. See, this is a valid flag. So you had the pullback and then the move down. You had a pullback, but you didn't have the crossover to go down. All right. So I wanted to explain that at the beginning of this. So when people keep asking, when do you know when a flag is over? So now, once again, I explained that. I can refer back to this lesson right here. For anybody who needs more understanding, you can just watch the beginning of this. And now you see the difference, right? See what happened here? So when price got to this trend line, I didn't buy or sell. I waited. I wanted to see. And notice, look at the momentum. You saw price was slowing down. It wasn't so aggressive up. As opposed to when price got up here. Look how strong. Look how strong momentum was to the upside. Look at that. How strong momentum was to the upside. So you wait for the crossovers, right? You wait for both of them, the MACD and the signal line, to start crossing through. Once it starts crossing through, don't worry, you'll catch the rest of the move. You see? Some people think, oh, I have to wait for one line to cross. No, wait for both. You see how? You're going to catch that move down. You're going to catch that move down. You're going to catch the sell. The main thing is you got to wait for that zero line crossover. You don't get that zero line crossover, you're not going to get that trend change. See, this was going up. I need a trend change. I need this to go back down. So I need that zero line crossover. I didn't get that over here. I got a continuation up. All right. Once again, you use indicators in conjunction with the analysis that you have on the chart. So if you identify in a flag, a head and shoulder, a double bottom, a double top, then use your indicator in accordance to what you see on the chart. But don't just go off the indicator thinking, oh, because it crossed over, I'm supposed to buy or sell. No, you're using the indicator incorrectly, right? I'm not big on indicators, but if there's one that I do use, I do like the MACD. Because it gives you everything. It lets you know what side of the trend you are. It gives you confluence, divergence, gives you everything. All right? And most importantly, it lets you know when that crossover, when that trend change is about to come. All right, guys? So now we can go over every single chart and look at the setups for the week. All right? You can set it up, right? You can't do it on Renkos. Somebody was asking me earlier. I'm finding out you can't do it, but on your candlesticks and everything, you can do that. So if you were waiting for like this crossover, just right click and then add. See right there, once, boom. See right there. Matter of fact, let me see. Something, will that still work? Add on the horizontal line. No, won't do that. So yeah, you can do it on Hackenacci and you can do it on candlesticks. You can put an alert right by the MACD crossover and I'll send you a notification. All right, so let's begin. Yeah, you can do it on Hackenacci and you can do it on candlesticks. You can put an alert right by the MACD crossover and I'll send you a notification. All right, so and add. See right there, once, boom. See right there. Matter of fact, let me see. Something, will that still work? Add on the horizontal line. No, won't do that. So yeah, you can do it on Hackenacci and you can do it on candlesticks. You can put an alert right by the MACD crossover and I'll send you a notification. All right, so let's begin. Let's look at all these setups for the rest of the week. So we know what we're doing. All right. So sideways movement on DXY, right? Right, this was a clear uptrend. Look at this downtrend, boom, and then just last week or the last two sessions, right? You guys really want to pay attention to your supply and demand zone. So if you looked over here, right, what happened? We had a strong move to the upside. And then you have to keep in mind, overall trend of this, we're looking for a reversal, right? So if I go on the daily here, we're looking for this to go up, right? So bigger outlook on this is up move, right? Probably one more move down. Either way, long term, we're going up on this. We are going up, right? See, this is, look at this uptrend, right? This was a clear uptrend. Look at this downtrend, boom, and then just been consolidating to the side. It's been slanting to the side. So I'm not expecting a down move anymore. I'm expecting a reversal back up. So when we move down to the smaller time frame, we are getting ready for that move. Right. Right, so you're getting a bullish flag now. You see your MACD crossover here. So if I was to move down one time frame, so from the 4 hour to now the 1 hour, before I get in on my buy, right? I want to see this probably potentially move back down. And before I buy, right? So bullish flag forming for buy. Bullish flag forming for a buy, and then you're watching for a breakout here. Great Britain USD. This is playing out pretty nicely. I told you guys, long term, we are looking for a buy on this, right? On pretty much all the Great Britain pound pairs, looking for a big reversal. Go back here. Really, actually, I'll give you a bigger outlook. Let's go on the weekly. Right. Right, and what did I say? I'm looking for this to come back to at least the 50, 61. Right, so 130. Boom. Right, price started reversing right around here. Why? Right, before you ever buy or sell, you should always know why you're buying or selling. Where is price at? Look left. What happened here? Look where price is. If I look left, I see this big move up. So same thing. I'm looking for that. Right? Strong area of buyers. Look at that big wick, that flash crash there, and then the strong move up. Right? So from here all the way back up over 700 pips. So now, how do I get in the trade? Same thing, right? came down. Draw my trend line. I go on the 1 hour. I got a reversal pattern forming. Right? So right around here, I started looking for my buys. And that's where I got my first entry, which was right around here. Right around here. See that? Boom. Stop loss below here. And as you can see, move to the upside. Right? Now it's not going up aggressive. I don't like the way it's slanting, so there might be a pullback. So what we're going to do here is, right, I'm still bullish long term. My bigger outlook is bullish. But on the short term, probably within maybe today, tomorrow, don't be surprised if this pulls back. Right? So let's go on the 15-minute, break it down even more. If I don't get a pullback like this and a continuation up, don't be surprised for a sell. So wait for this before buying. Right. There we go. Wait for that before buying. Good. Odd USD. Same thing. Right? Price came down, started reversing. Why did it start reversing? Right here. Right? Right here. Right. Some of you guys forget. Remember, I'm very big on supply and demand. Right? Some of you guys forget. I'm very, very big on supply and demand. So, you know, if I've always pretty much ran my trades from zone to zone. So, you see that? Zone, zone, right? Zone, big zone, right? Always, 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 always. So from zone to zone, right? Trade from zone to zone. So you had a strong bullish move up here. No surprise. Now here's the thing, and this is where like a lot of supply and demand, support and resistance traders go wrong. They automatically assume that price is gonna reverse at that area. They assume. So when you identify your supply and demand, even support and resistance, you don't automatically sell. See right here, and I'm going to show you. See right here, guys? See how price hit this area and then price did it again? But notice, what did price do? It went above it, right? Overall, it still came down, yes, but it went higher than here. So what happened, right? How do we avoid those pitfalls? So again, when I'm trading, so I just marked up on my 4 hour, right? Again, I'm not watching for my entry on the 4 hour. I'm not watching for my entry on the 4 hour. What I'm going to do is I'm going to jump down to the smaller time frame. And now I'm going to watch for reversal patterns, signs of a reversal. So I got that. When price came here, I got my reversal, right? I got my reversal pattern, letting me know. Boom. I got that. Impulse, small little bullish flag right there, and then breakout. And notice, look how this also lines up with the MACD, right? So when this was being created on the 15-minute, this entire time when price was coming down, I was in a downtrend. Downtrend. So there's no reason for me to even think about buying. Maybe over here. But notice, right? So this is where some people would have bought already, right? See how one blue line went over but not the orange, right? Wait till both cross. See how both is crossing? So you could have bought here. This would have been perfectly fine. Both is above it, right? And then you have your breakout. Don't wait just for one line, both. So when that happened, boom. That's your entry right around here. Stop loss below previous low. So now I have a low risk, right? 8 pips, high reward setup. See, I'm risking 8, maybe 10, 11 pips, and then I got a 44 pip move to the upside, even more, right? 63 pips, right? You guys will take those take those odds every single day. If somebody told me every single time I enter the market, I'm going to risk 8 pips, 11 pips, but my reward is always 63, 73, right? 7 times my risk. I'm going to take those odds every single time. That means I can lose 3, 4, 5 times, win on my 6, and still come out ahead, cover my losses, and still profit. That's how you want to trade. Every single time, guys. That's how you want to trade. But you see what happened right here? You see how I stay on my 15-minute? I never entered the trade. Nowhere here, possibly, maybe. But even if you made the mistake, let's say you did enter right here, right? Because you thought you had your crossover, right? You thought. And let's say you place your stop loss below here, right? Clearly, you would have got stomped out. But again, you already have this pattern forming. This reversal bullish pattern. That was your signal. The moment this reversal pattern was forming, I'm looking any opportunity I can look in to jump in for a buy, I'm jumping in. So even though I would have lost this trade, let's say you did jump in because you thought you had your crossover. So you had a 9 pip stop loss, right? So you got stomped out. Boom. You wait for it again. Now you get in again with another 9, 10 pip stop loss. Look at that. Again, this was over, 60, 67 pips to the upside. You more than make up for the loss that you accrued. You make up for the loss and you still profit. You make up for the loss and you still profit. That's how you want to trade. That's how you want to trade. You want to identify a pattern. Once you realize what that pattern is forming, then you find a strategy of how am I going to get inside that pattern, right? When this flag was forming, how am I going to get inside this pattern? So I see this pattern forming on the 15-minute. All right, cool. I'll stay on the 15-minute or I'll go on to a smaller one. Once I get the crossover, right, price pulled back, then I get the crossover down, then I sell. Entry here, stop loss there, voila. Every single time. All right? So when price came down here, I didn't automatically buy. I waited for a pattern to reveal itself before buying. That's what you're supposed to do in supply and demand zones. You don't automatically assume, right? You always want to make sure that, all right, before we jump in on the sell, I'm getting the signal that the sell or this buy is coming. And then what I originally wanted to show you guys was on the 1 hour, right? Because we marked this up on the 4 hour. Apologies. TradingView loading. Right? So here. So 1 hour. So price came up. Strong impulse. All right. That's not giving me a good confirmation that we got to sell yet. So once this came down, if I would have rolled down to a smaller time frame, preferably 15-minute, and then I see a pattern I recognize, then I jump in on the sell. And then if you notice, you get even smaller flags, and then smaller flags, and then smaller flags, right? And then same thing, price came up, and then look what happened here, look what happened here. So if I go down to the 15-minute, alright, and I tell you guys all of this because, again, I've been there. So there's a lot of you guys, especially those who are brand new. You're going to come in, you're going to open up your account, and then you're going to start trading. And then you're going to realize there's certain things that you need to know. I'm trying to help you prevent those pitfalls. So when you do come into the market, now you are aware, like, oh, okay, I have to wait for certain things before I just buy and sell. Because if it was that easy, we all be millionaires. Right, guys? And as you know, nothing worth having in life is easy. Right? It takes more than just pressing on your keyboard and your cell phone, just buying and selling. Right? Now, again, signals are cool. They're very, very cool, especially when they work out. But as always, you want to be your own signal. You want to be able to look at the market and know what you're doing. So look what happened here as opposed to right here. Right? Like I said, price came up to this area and then it kept going up. Right? Price broke the zone and then kept going up. What happened over here? Should always look at the past to see what happened in that particular price area. So over here, 15-minute, you had a reversal pattern for the sell. And then even when the sell came, you had a nice flag pattern. And then boom, price came up again, right? So when it got to this resistance point, what did it do? It gave you an impulse, a bullish flag for a continuation up. So I'm not selling, I'm buying. So it wasn't until here, now I see two patterns. I see a head and shoulder. And I see a my impulse, a flag, bearish move down, another flag, and then you move down. Wait for the patterns. When price hits a major zone, demand, supply, wait for the patterns. Trust me, you'll feel a lot better once you're able to identify a pattern and then know that, okay, after this pattern is formed, this was coming up. And then you just put everything else together, your indicator, whatever case may be. So after this impulse down, you see, so I got the crossover, came down. So now I got my flag, that's the pullback. So you see how price went above it again, and then now I'm looking for a crossover again for that sell. So when it crossed over here, this is where I'm entering. Stop loss right above the flag, and then I catch my sell. See how you line everything up? That's all you're doing. You're lining everything up. You're lining everything up. Before you buy or sell, you're just lining everything up. All right? So I just wanted to pass out these lessons and not just rush through the setups for the week, right? Because, again, understanding this is very, very important. It's a part of your trading journey. And the more you understand how this moves, how this operates, understanding these patterns, guess what? The better trader you will become. All right, so let's get back. Let's continue. We got a long way to go here. So we had impulse correction, boom. So now what I'm waiting for is a pullback before continuation. Alright. I'm actually getting it now, so don't be surprised. Wait for this, just like here, and then we look for price to go up. Alright. Look to buy here. don't buy here. Right, wait for that pullback and then buy. Oh, please, nobody do that. Don't be recruiting people on this session. Last thing I want to do is have people breathing down my neck. Stevenson, cross recruiting happening on your IML chat. Alright, Golden Nuggets. Perfect. Okay, New Zealand USD. So even when you guys are on other people's sessions, right? Again, you know, certain other traders, whether you're following Lex Wave, Oren Wright, Lasado, whoever, now you know right before you hit that buy or sell, again, when you wanna enter that trade, boom, now you can verify on your own, okay, everything is lining up, giving me that reason why I should buy or sell, right? So, for example, and he's probably going to yell at me, but I don't care. So, teacup, right? Shout out to my guy Lasado. So, teacup. So, teacup is essentially double tops, right? Anybody who's on Lasado sessions, double top, right? Is that correct? Let me just verify. It's pretty much double tops, right? Somebody confirm that for me. I've never actually watched his session. I'm sorry. It's a rap concert on there. So all I hear is music. Nobody? I know somebody in here. All right. Yes, 100%. So it's double tops. All right, perfect. So double tops. So perfect example, New Zealand USD. So let's say this 1 hour, right? This is a double top right here. So if I was taking teacups, this is how I would play it. I see a double top forming on the 1 hour, right? So basically I'm waiting for that second handle. Now he has different rules. I think he waits for like a couple of bearish candlesticks and so on and so forth. I'm not exactly sure the rules. But what you can do here is, again, when those teacups come, right, jump down 1 or 2 time frames, and then boom, the moment price starts moving, right, gets to the second top, which is this. That's your first top. This is your second top. When price get there, you can do one. You can play this a couple ways actually. You can actually draw a trend line, right? Wait for price to break that trend line. That's like one of your confirmations, or just line it up with your MACD. So take out the RSI, put in the MACD instead, and then voila. So your entry is right here. Your stop loss is right above. So entry right there, stop loss right above there, and then look at that. So you're risking about 25 pips, and then you got 123 pips to the downside. I think that's a great risk to reward. So I'm risking about 25 pips, and I got 124 pips to the downside. All right? That's a great risk to reward. I'll take that every single time. So like I said, even what you learn here, you can apply anywhere else on anybody's strategy, right? It's all universal. It's just all about understanding how to utilize the tools in front of you. That's it. understanding market structure, understanding all of that. And then notice, even for people who are on the sessions, notice during this teacups, look at that. You have a what here? You actually get it twice. So you had your double top on the 1 hour, you got a impulse, you got a flag, and then you got a continuation. And what happened over here? You had an impulse, you had a bearish flag, and then you had a continuation. Then you had another bearish flag, and then another continuation. See? At the end of the day, it's all the same, guys. It's all the same. When you're watching somebody else, you're just watching their perspective, right? But they all coincide. We all end up at the same end of the road, right? We just took different paths, but it all aligns. All right? Watch. So next time you're on a session, whoever's on a session, do that, right? Just for a trial. And I guarantee you, your success rate with that product will go up tenfold. All right, so New Zealand USD. So same thing. We're waiting for a pullback. Wait for that before buying. Wait for that, and then we're looking to go bullish. All right, looking to go bullish. Go back to 15-minute. Zoom in. Wait for that pullback like this, right? You don't want to buy here, right? Let it come down to that 0 and then buy, right? I told you somebody was going to ask that question, so I don't want to butcher your name, Zane Sohail. Watch the beginning of this session when it uploads. I went over exactly that, bearish and bullish flags, at the beginning of this lesson. You don't even have to go to IML Academy. Just once this session is over, go to the beginning. I went into very detail, knowing when it ends to when it continues, and you'll see what I mean, right? So. All right, USD CAD. All right, I haven't personally traded USD CAD. I'm glad it's pulling back because I got stomped out, and I was really bearish on this. Was mad. I actually had my sells. Actually, I think around here. Around here, had a sell, and then it took me out and then dropped. So I've been pretty sick. So thank God we have pullbacks because I need it. And this should pull back. Definitely pull back. So watch on the 1 hour for reversal. Bullish. Not forming. Then I have my stop loss right above it. See that? Look at that. So my entry's there, stop loss there, right above it. So about 27 pips. Price. These two right here. So 15-minute, I have my impulse there. go. So USD Swiss franc. Right now, overall, we're in the downtrend. Anybody caught these sells? Good job. These were clean sells. Like, this doesn't get easier than this, right? You had a nice impulse, flag, right, down, flag down, flag down. So again, one more walkthrough. So when USD Swiss franc was making these drops and you had all these bearish flags, if I'm on the 4 hour, I'll just drop down 1 hour to the 1 hour time frame. So 1 hour below, right? You can go 2, 1 or 2, and then again, look. So we're gonna go all the way back up there. Right? So perfect example, look at these flags. These two right here. So 15 minute, I had my impulse there. So look, came up, right? That's entry number 1 right here. I got my crossover lined up. Then I have my stop loss right above it. See that? Look at that. So my entry's there, stop loss there, right above it. So about 27 pips. Price came back up based on the 15 minute. So that's cool. Again, I'm waiting for another crossover. Boom. So my entry there. Stop loss here. So now I have 2 entries because price never tapped me out here. So I got this original order, that original order. So I have a 27 pip. And then on my second order, I have another 28. 27, 28. So altogether, about 56. Right? I'm risking about 56. But as you guys can see, 82 pips down, all the way down. So on 2 orders combined, I'm risking about 56 pips. And my reward is about 460 pips. Right? Actually, since my first order was here, it's probably a little bit sooner. Not big difference, just a couple more pips, but yeah, about the same, right? 6 pips more. But you get the point. So 230 on one, 236 on another. And all I risked was about 28 pips. See the risk to reward? Even if you would have stopped here on this impulse right here before this flagged up, right? 80 pips. 80 pips, and I'm assuming on the other one, so 6 pips behind, so about 74 pips, right? Maybe 80 pips, 70, 74, 76. So still over 150 pips on 2 orders. Just if you would have stopped right here, right? Still great risk to reward ratio. All right, guys? That's how you want to trade. That's how you want to trade. Entry there, stop loss above the previous high, and then you let your trade run. All right. So same thing here. All you're doing, waiting for another flag. And you want to see this come down here. Watch price at the low. Wait for another bearish flag. Get that, and then that should move down. No, I don't use trailing stop loss because I tried it a couple times, and it's good for a scalper if you like to scalp. It's a very good tool, but I don't scalp heavy like that. So, because what always get me mad is, when I mark up my chart, I get like an analysis like this. Like I know price is coming all the way down, 300 pips. So look at that, 305. And then I only caught 15 because with trailing stop, remember, as price is moving this and you're in profit, the trailing stop is following your profits. So just a little bit of a drawback, and then out of nowhere, you get taken out of your position. And then what sucks is, again, if a big move like this comes, just because of a pullback like this, or even, this wick back over here, you got taken out. And then, what happens if you're at work or you happen to be out, or like myself, always on a plane or just somewhere, and then you missed out an entire move. But if you like to scalp, then trailing stop might be something that's for you, right? But for me, I was tired of missing like the big moves by using trailing stop, so I don't incorporate it. USD, JPY. We trading over there. She just left me. Said I gotta go. So USD, JPY. So you see my notes from last week. If price did this right over here, right? So I was expecting price to basically go up, right? If everything played out. But look what happened when price came here on the 1 hour. So again, if I went down to a smaller time frame, let's say I was on the 30-minute. Now I'm going to show you again the difference. And this is the key. You see here the difference? This is not the same as what happened here. This just came straight down. Aggressive. That's why I'll always put notes, guys. I'll be like, watch price. Don't just buy or sell. Don't assume price is going to just reverse at these areas. Watch price. Because you might not get the same reversal pattern like you did last time. So you see what happened there? See what happened the first time? Right? See what happened here the first time? Look what price did when it got to that low. See that? It reversed, came, and then, not exactly, so you had basically a double bottom. See, came up, double bottom, and then shot up. Right? So you had a reversal pattern here, reversal pattern here. No reversal pattern here. See that? So even when you're marking up on your own, even if you're doing something simple as support and resistance, you can still be profitable as long as you're not just buying and selling off of support and resistance, thinking price is just going to reverse there, right? That's what, if you've ever watched the support and resistance trader, right? I'm waiting for price to hit this resistance zone and just reverse. Well, why? What's your reasoning? Just because price rejected over here, like for example, this right here, this is a resistance. So you're telling me you would have sold, right? Price came down a little bit, but then what happened afterwards? Price shot up. So if you were expecting this down move, because price came here, you got killed. Watch for the reversal pattern before buying or selling. That's very, very critical. All right. So now we got a sell opportunity here on UJ. I actually like this sell opportunity. This is a good one. I'll keep an eye out on this. I haven't traded UJ in a while. Alright. Look at that. Boom. So now all we need, 1 hour. All I need is a bearish flag. I get a bearish flag and then I got a nice sell. So if I get this bearish flag on the 1 hour, I can go on the 30-minute, 15-minute, and then jumping for myself. All right, there we go. This is what I'm looking for. Something like this. Flag. And then drop. Nice 200 pip move. A bearish flag form and then sell. No, you don't have to always go down. Like, you can stay on the 1 hour. So if I'm analyzing something on the 1 hour time frame, right, I can stay there. But again, so for example, right, and I don't normally do so many for examples, you know, guys, me, I'll just move on. But because the lag has been so crazy, I said, you know what, I might as well just do a lot of examples. So, for example here, right, I'll use two. I got this impulse. This is a perfect example right here. And then, boom. And then I have this, right, impulse and then flag. All right. So, I can stay on the 1 hour, right? I can stay on the 1 hour. So, price came up. So, you have that impulse, crossover, that drop. Now, remember, you don't buy off of impulses, right? You always wait for a flag. So wait for that pullback. So price pulled back, and then I got in for my sell again after my crossover, basically right here. So right around here is where I would have got my entry. That's based on the 1 hour time frame, right? So that means I did my analysis on the 1 hour. I stayed on the 1 hour. Now watch the difference. Let's say I go to the 30 minute. So now I'm on the 30-minute time frame for that same setup. If I go for the 30-minute time frame, remember my 1 hour was right here. My 30-minute, not so different, right? I start to get my crossover right around here. So not so big of a difference. Right? So I would have entered here on my 30-minute, right here on my 1 hour. And let me see if I go on my 15-minute. Right? Now, haha, see what happens? My 15-minute, you see how the two lines crossing over on the 15-minute here? That's my entry here. So, 15-minute entry. 30-minute entry. 30-minute and 1 hour are pretty much about the same. And 1 hour entry. Right there. See, that's how you back test something, guys. Right? Every time I show you guys something, I always back test with you. I always show you what price has done previously. This is how you back test. So this is my 1 hour entry. So on my 1 hour, my stop loss would have been right above the high. So it would have been right here. My 30-minute, my entry would have probably been right above here, maybe a little bit higher. I probably would have got stomped out on that fake out there, right? And then here's my 15-minute entry. My stop loss would have been right here. So even on that pullback, my 15-minute entry would have still been in. But look at where my 15-minute entry is. So I got in here, stop loss 20 pips right there, and then I got a 55 pip move down there, right? So that's why I said, wherever you're analyzing the market, whatever time frame, you see you're about to, you know, oh, I see a head and shoulder on the 1 hour. You can stay on the 1 hour, but you'll get a tighter entry if you jump down a couple time frames. The only thing is you have to keep in mind when you do jump down to the smaller time frames, the amount of entries you're going to get in. So technically, if I would stayed on the 15 minute, I would have had an entry here and another entry actually around the 1 hour. So what I had 2 entries, right? I would have had 2 entries. So 1 hour here, 30 minute there, 15 minute here. So you see the difference, right? And if this was another pair, UJ doesn't move as aggressive as like GJ, EJ, some other pairs. So this was actually pretty safe. But if this was like GJ or another aggressive pair, the separation would have been bigger. But you see, 1 hour entry here, 30 minutes, so you would have been in there sooner. 15 minutes there, you would have been in there a lot sooner, right? That's the difference. All right, gold. All right, gold pulling back as I had marked up. Pretty good. I see gold going up one more time before dropping. I'm looking for a big drop. So one more push up to around 1440, 1450. So go to the smaller time frame, 15 minute. Right? Kind of getting a head and shoulder here. So I want to see what price does when it gets to this low. Right? Looking to buy here, just like over here. See that? So that's what I want to see over here. Right? I want to buy here for continuation up. Let it sell. If you want to grab the sell, you can grab the sell. Just have a tight stop loss. Let it come down and then look to buy here. It all depends on what time frame you're trading on. So it's not about trade on the 1 hour, 15 minute. It all depends. Like my situation will always change. If I'm analyzing and I see a big setup on the daily, then my entry would probably be on the 4 hour. If I'm trading on something on the weekly, then my entry is going to be on the daily or 4 hour, right? So it all depends what time frame you're analyzing the chart. That's why every situation will require a different analysis, a different approach to the market. I can't use the same approach I did here. I can use the same strategy. I can use the same principles, right? Trading off of supply and demand, flags, all that stuff like that. But as far as entries, it's always going to be different. I don't always enter on the 1 hour. It just happens to be on this situation, I see a 1 hour setup. But on some other pairs, as you guys saw me do, there's a 4 hour setup. I see some daily setups on some other pairs that we're going to get to. So it all varies. And again, you watch, it depends. So if I see a setup on, again, if I see like a flag on the 4 hour, I'm going to watch it on the 1 hour for my entry. If I want to go down 2 more time frames, right? If not the 1 hour, maybe the 30 minute. All right. It depends on my entry and where I'm looking to get into the market. All right. I'm looking for price to come all the way up to 16. Right, kind of like gold, because I see a nice supply zone here, right? Get that wick. So you see, this is a daily setup. So I go on the 4 hour. Really the 1 hour here. Wait for price to pull back. And then buy. Right, wait for that little pullback. You can go on the 1 hour if you want. So on the 1 hour, you see how it's pulling back, it's starting to drop. Wait for it to drop. And then come back and cross over that MACD for your buy. Yes, silver moves similar to gold, but it doesn't move as fast or as aggressive as gold. Yes, always know where you are in the market before entry. That's very, very critical. Very important. A lot of people take that advice for granted. They don't know where they are in the market. That's why when I mark up the charts, I always identify what trend am I in, or what supply or demand zone that I'm in, right? That's important. Like here, I got a strong demand zone right here. Why? Look. Big move up there, up there, up there, right? So there's a good possibility price come here and then come back up, right? Area of buyers. So all of this is just consolidation on USD peso. So this is going to continue dropping. We need this. No, gold does not correlate with Bitcoin. No. You don't watch. All right. There's a difference between where you analyze your trade and where you enter your trade. Right? If I'm analyzing on the daily, right, my overall analysis is on the daily time frame. Don't confuse that with where you're entering the market, which is something a lot of people do. So if I make an analysis on the daily, so like I did with gold and silver, so I got them going on an uptrend, continually go up unless the structure changes. What happens is people jump on the 5-minute, 15-minute, and then they get stuck on that 5-minute, 15-minute. Don't forget overall what the trend is doing. So overall, if you look at gold, overall it's going up. Overall it's going up. So just because it's dropping on the 1 hour time frame doesn't mean I stay on the 1 hour time frame and I just sell, because then this happens, right? Everybody's been wondering, oh man, gold's been going back up. I thought it was dropping, then it went back up, because the overall trend is up. Gold has been going up for the last couple of months now. So always be in line with the trend. You're just using the smaller time frames for your entry, right? Gold's been in an uptrend since August of last year, uptrend. So if you think about it, on all these dips, pull back, you would want to buy. Pull back, you want to buy, and then boom. That's why I always say on the higher time frame, mark up your chart, identify the trend, and then on the smaller time frame, get in line with the trend, right? But don't get stuck on the smaller time frame because you see a pullback, and then you wonder why price is going the opposite direction. All right, so that was USD peso, USD ZAR. USD ZAR. Actually looking for this to go up. Right. Watch price here. Alright, we got a reversal pattern coming up, and then I see a big move to the upside. Be a nice trade. We should get that this week, right? Let that pull back, and then buy. USD try. Watch here for breakdown. See like here, breakdown, breakdown. Watch for that. Alright, so go on the 1 hour if you want. And then see here, watch for that breakdown. US 30. Be on the lookout for see those. Right, we want to see that. So it's definitely due. Let's go 30 minute. Right. So you see here on this 30 minute, See what happened here. See there, there. We want to see that over here. I like this setup very much. Keep an eye out on US 30. This should happen this week. You guys should get that. This will be a great trade. Right. Price might keep going up, but you got a great trade to the downside. Reversal pattern on the 1 hour, 30 minute. Right? Price can't keep going up like that. We know that already. So eventually you're going to see a breakout. So I'll watch the 30 minute, 15 minute. If I get a sharp impulse, I'm selling. That's a good setup right there. Euro, JPY. Euro, JPY. Right, look for this and look for that. Look for price to reverse at the bottom. Look for reversal at the bottom. Euro Swiss franc. There's flag forming. This is actually a good trade. It moves very, very slow, but it's actually playing out pretty nice. Right? You're getting another flag right now. There's an easy trade, Kim. Easy trade right here. Euro Swiss franc. We're going to get into sell for that. This is easy right here. It already has the makeup, already downtrend. You already got your bearish flag breaking down. Smaller time frame, 1 hour. Bearish flag forming. Probably watch it on the 30 minute. Right? Yeah, just let it get back here. Right? Whether it stops here, reverses, or even goes across. Like you see what it did here, cross, and then come back down. So that would be your entry when it crosses back over. All right, so let this flag form. Nice bearish. This is an easy trade right here, guys. All right. Let bearish flag form and then sell. Easy trade. Easy, easy trade. And it doesn't move so aggressive, so you could kind of put a little more weight on it when you're trading. I know I will, so that's an easy trade setup right there. Nigel, I'm in another country, so apologies. Again, that's why so much technical difficulties and everything else, but I'm speaking as loud as I can. If not, you're going to have to put on some headsets. If not, you're going to have to wait till this session is done and watch the recording. But I can't speak any louder than I'm already speaking. All right. Euro New Zealand. This is playing out very nice. Look at that. Came up, now dropping. I don't know if anybody caught that from last week. See, patterns work. Trade setups work. See, came up. This is where we're looking. Look to sell at the top. You had a fake wick, and then price is now dropping. Now, what we're looking for is price to continue going down, right? So if you think about it, Euro New Zealand, and remember, you guys should always have this on your watch list. Euro New Zealand has a big move to the downside, right? Big move to the downside. Right. Big move to the downside. About 500 pips more. All right. So that was really a 4-hour daily correction. So what we want to wait here is a 1 hour. All right. Not probably as this big, but a nice 1 hour flag, and then look to sell. Watch for bearish flag. Yep, I called it in June. And for those who are still holding, congratulations, right? So far, that's right. I called this in June. For those who remember, June was right around right up here, right? So if you caught that, good job. All right. That was up right around June. So far, over 400 pips to be exact. Well, actually, yep, 483 pips from when this trade was called. Right here. 433, 483. So let's say you had 10 standards, right? 48 times 10. Anybody? What's that? Matter of fact, even one standard, right? 4,800 bucks. And it didn't take too long, right? 23 days. Not bad. So patterns work. No, it won't change to an earlier time. This is what's convenient for me. Unfortunately, I can't do earlier time. This is a long session, I'm not gonna lie. Normally I would have been done already, but again, because I'm dealing with OBS, plus I'm outside of the country, loading issues, so that's why it's taking me a little bit longer. And then I keep stopping to teach you guys something, right? So I understand it's probably past some of your guys' bedtime, got work in the morning, I get it, no problems. But yeah, like I said, I'll be back home in the States with the money train next Tuesday. So you guys will be happy. Everything will be back to normal. Euro odd, same thing. Yup. Euro odd was called. I told you guys, pay attention to this. This has also dropped 300 plus pips. So that combined with Euro New Zealand up 7, 8, close to 1,000 pips, right? See, just on two pairs. You don't one more. All these Great Britain pound pairs. Not just that. Great Britain, Swiss franc, another one.